Hello, and welcome to the National Fintech Organization, and this first presentation in the series, NFO's Growth Garage, Get Smart and Get Connected. Today, we will discuss the launch of the NFO, and then have a conversation and Q&A with Kathryn Petralia, the president and co-founder of Cabbage. All attendees are in listen-only mode, but the chat feature is available at the bottom of the window for comments that can be viewed by all other attendees. Please, give it a try now and let everyone know what part of the world you're connecting from. We also encourage questions for our speakers. Please enter your questions using the Q&A feature at the bottom of the window to ensure they're seen by our moderators. This session is being recorded and will be available on demand within the next few days. And now, I'd like to hand it over to our speakers. We'll start with Jeff Harper from Allied Payments. Jeff?
Hey, thanks, Joey. I'm Jeff Harper, Chief Revenue Officer with Allied Payment Network. Allied works with community banks, credit unions, and fintechs as it relates to the payments ecosystem. Today, we're excited to officially launch the National Fintech Organization, NFO. Now, NFO is a new nonprofit serving the unique business needs of early stage fintech companies, typically pre-seed to A-round funding, and others that have vested interest in their success. Now, fintechs represent the intersection of customer experience, creativity, and possibility. The possibility of improving how consumers and businesses access the financial system. Today's session is to share our vision of the organization, introduce you to some of the people and companies behind NFO, and to meet a rock star in the fintech world, Kathryn Petralia, co-founder of Cabbage. My friend and fellow AFT board member, Kara Parkey, will be joining Kathryn in a few minutes for their conversation. Now, NFO is the sister brand that complements the Association for Financial Technology, AFT. AFT is a nonprofit trade organization serving organizations, companies supporting the fintech and financial services industry. Today, I am humbled to serve as the president of AFT, and we have over 100 companies that have been members of our association going on 50 years. Our association meets twice a year to collaborate, network, and to partner to better serve financial communities and financial institutions. If you would like to learn more information about AFT, please reach out to me on LinkedIn, and I'll be happy to tell you more about our association. But today, I'm really happy, again, to introduce you to some of my industry friends to tell you a little more about NFO. And today, I want to now welcome Michelle King from Nashville to the stage to share her interest in our association. Welcome.
Thank you, Jeff. Really appreciate that. I'm Michelle King, President of Bank Director in Fintechs Tech. Our company focuses on the business needs of bank CEOs and the boards and the companies that support them. And it's my pleasure to welcome you here today. As Jeff mentioned, the National Fintech Organization, or NFO, is a new nonprofit serving the unique business needs of early stage fintech companies and others who have a vested interest in their success. We are proud sponsors of the NFO and appreciate you joining us here today. And it's my pleasure to introduce you to Terry Ammons of Whitley, who's joining us from Atlanta. Terry?
Hey, thanks, Michelle. Appreciate it. As Michelle said, I'm Terry Ammons and I'm with Whitley. Whitley is a national accounting and advisory firm, and I'm currently the leader of the firm's fintech practice. NFO seeks to achieve its mission by providing access to original and curated education, connecting people with others who can further their efforts, and assisting fintechs to close more business, whether that's funding, partnerships, or customers. And while they're not represented here today, NFO is extremely proud to have the ICBA as a part of our leadership team. Now I'd like to hand it off to Don Parker with Amex.
Thank you, Terry. It's a pleasure to be here with everyone today. As we think about achieving our vision at NFO, which is to serve and support those who create technology, platforms, and or business models that challenge traditional approaches to providing financial services, in order to do that, you are going to need great data. And this is one of the primary reasons why Amex is thrilled to be a founding sponsor, along with all of the others who are supporting NFO, because Amex is an open finance company and the most trusted and secure way to verify and unlock financial data. We power secure data sharing through the financial ecosystem to improve outcomes and deliver better experiences that drive loyalty and growth. We work with fintechs of all sizes, banks, and digital platforms by providing APIs to build industry-leading digital products and services. So for that reason, we look forward to the great things ahead for NFO. And with that, I'm happy to turn it over to my good friend and industry mentor, Mike Alice with FIS. Over to you, Mike.
Thanks, Don. Welcome, everybody. Super thankful that you're all here. I'm very excited about this time that we have together and FIS's ability to help sponsor this webinar. My name is Mike Alice. As Don noted, I am with FIS. Many of you probably know who we are. We're a large financial technology provider serving for many different industries around the world. FIS has been around fintech for quite a while, and we realize the importance of fostering companies that are bringing innovation and new approaches and fresh leadership to the financial technology space. So we're really excited about the NFO. We also realize the importance and benefits of finding ways to take the technology that organizations like all of you out there have already developed and deploying them for industries outside the traditional financial institution space, like insurance or healthcare, as an example, where it can serve the customer. So FIS is really thrilled to be a part of NFO. We're thrilled to help sponsor today, and we're excited about the role NFO will play bringing education and network support to those objectives. So welcome, everyone. And with that, I'd like to give the ball to Matt Dean, my good friend with Trabian, who is in Indianapolis 500 country. Matt, the ball's yours.
Thanks, Mike. I appreciate it. I am with Trabian, but I'm also with MVB Bank. It's a fintech focused bank and publicly traded, but not necessarily as publicly known. More likely to see our logo in the fine print at the bottom of a billboard or on the back of a card than to see it at an ATM or a branch. We do work with a lot of large brands. Credit Karma is one of the biggest brands that we work with, but we also work with DraftKings, FanDuel, and BetMGM. We work with our good friends at FIS, and we work with Fiserv. We work with Crypto.com, and we work with Kraken. MVB prides ourselves on being a trusted partner. We believe that partnering is a critical capability for banks and fintechs, including this group, NFO's membership. And early stage fintechs in particular may not know where to start. So we see NFO as helping companies and people learn more about each other, what possibilities exist, and we're proud to be a founding partner of NFO. So with that, I'll turn it over to my good friend, Tommy Marshall in Georgia.
Thanks, Matt. Hi, everybody. I'm Tommy Marshall, the Executive Director of the Georgia Fintech Academy of our University System of Georgia. Also, our system is home to the national football champion University of Georgia Bulldogs. Over the past 3 years, the Georgia Fintech Academy, we've addressed 4,300 students with fintech education, and we're very proud to say we've helped 1,500 students find jobs in this fantastic industry we all operate in called fintech. I've led NFO's educational committee, and I'm proud of the themes that we've developed to really help all of you, which largely focus on business needs such as raising money, closing new business, pricing services to your end clients and customers, and so on. You can learn more about what we're structuring from an educational standpoint at nationalfintech.org/resources. I also want to make sure you put on your calendar now our first educational related event on June 21st at 11 a.m. We'll have Sam Kilmer from Cornerstone Advisors. I also saw Sam in the chat, so if you'd like to have a direct with him, he's with us today. Sam's going to lead a session on success factors for fintech companies in getting deals. So please put that on your calendar now, and we look forward to releasing more program dates very soon. Super excited for this event. Kara, I'm going to turn things over to you to get things started.
Awesome. Thanks, Tommy. I appreciate it. Hi, everyone. I'm Kara Parkey. I'm a VP in the Office of the CEO at Amex. It's an honor to be here with you guys to launch NFO, and an absolute privilege to be joined by Kathryn Petralia. Kathryn, are you on?
I'm on. Hi.
Hi, great to see you. So by way of introduction, as you've heard, Kathryn is the president and co-founder of Cabbage, Inc., now a part of American Express. She spent the last 20 years working with startups and established companies focused on credit, payments, technologies, e-commerce. So it's just a wealth of knowledge. We're very excited to have her join us today. I'm going to be asking her a few questions. As Joey mentioned at the beginning, please use the Q&A feature if you have questions that you'd like to ask Kathryn. We'll try to bring those up as we speak. So again, Kathryn, thanks for joining.
Thanks for having me.
Yeah, absolutely. So maybe just to kick things off, maybe just give us some background on how and why you started Cabbage. I know you guys were founded in 2009, but what's the story of how and why you decided to start Cabbage?
Everybody expects the story is going to be that, we were running a small business and we didn't have access to capital and we just knew there was a better way to do that, but that had nothing to do with it. It was really inspired by, although we'd both been involved in small businesses before, it was really inspired by an API that eBay launched in 2007. My co-founder, Rob, thought to himself, that's really interesting data. I wonder if you could use that to underwrite a small business for a loan, a business that sells on eBay. And that's sort of how Cabbage was born. And, early on, of course, all of our customers were e-commerce. We started in 2009. By 2014, I would say 90% of our customers were brick and mortar. So the proliferation of APIs is what really allowed us to, expand our market and provide our product to more people. It's always about, timing and team and, TAM, I guess, when it comes to these kinds of businesses.
Totally. So talk about maybe those early days, as you heard Tommy say, we're going to have a lot of earlier stage fintechs on here. Right out the gate, was it incredibly successful? Were you overwhelmed with clients? Was it difficult? Did you run into some difficulties getting it off the ground? Maybe talk about the early days of Cabbage.
Well, there were a million difficulties. Neither of us, well, there were three of us who started Cabbage, also Rob Frowine and then Mark Gorland, the three of us started it together. And none of us were technologists. We love technology. We understand how to use technology to, improve lives and business, but we didn't write any code. And so we had to hire someone to build the platform for us. And that was really hard because we couldn't decide what kind of person we want to hire. Do we want to use Java or C#? These are all questions that we couldn't answer. So we just had to go with our gut. And we were really fortunate that we hired this unbelievable technologist who built the whole thing himself. I would say, success is slow. It always is. And, you don't know that things are going well until you wake up one morning, you're like, oh, no bad things happened in the last couple of weeks. That's pretty exciting. And customers are using our product. And that's we
right.
love that. But I remember when we first launched, we did this ad with eBay. They had a newsletter and we're like, oh my God, it's going to be amazing. They're going to send it out to tens of thousands of eBay sellers. I slept in the office all night. We were just waiting for everything to be on fire. And we did. Emails started coming in and customers started replying. But it turned out we didn't need to do anything because we built an automated system that actually worked. And that was really exciting for us.
That's awesome. I love those moments. I'm sure everyone related to the sleeping in the office days back at the beginning. So on that, you guys have, again, been around, obviously acquired and raised a bit of money throughout the journey with Cabbage. Can you talk a little bit about the rounds and raising money? What was your experience raising funds, pricing, vetting VCs, the importance of your partners there? Just any advice you have and anything you can let us know about your story.
We used to joke a lot that if you wanted to raise money for your business and you're based in Atlanta, that you needed to make Delta your silent partner because you're going to have to get on a plane to raise the money. We did raise our seed round from, some of it from, folks around Atlanta. Mark always called it friends, family, and fools. But every one of our institutional rounds was led by somebody on the West Coast, based in New York, a lot of international investors. And so it was really hard, right in the throes of the global financial crisis for a company based in Atlanta, founded by some old people who weren't technologists and didn't have fancy degrees. It was really hard to raise money, but we persevered, I guess. And over time, I think it did get a lot easier. But when you're in a capital intensive business, then you're raising money not just for equity but also for debt. So we were always in this state of looking for the next round, looking for the next facility, and that took a lot of our time.
Yeah, absolutely. I know it's my former company was in Nashville, and we would always joke about that as well, but ours was Southwest, not Delta, being your silent partner there. So back, either in the early stage or later stage, partnerships is a huge part of both AFT that Jeff Harper mentioned, NFO we're launching here. There's going to be inevitably partnerships that are formed through the relationships built here. Were there any vital partnerships or partnerships experiences that you guys had in either the early stage or throughout the life of Cabbage that you would credit or talk about the importance of those relationships?
There's a little tiny company, they're not really small, but I think of them as small. There's a company based in Atlanta called CoreCard. We were introduced to them. They're actually the backbone behind the Apple Card, the Apple Golden Card. So they have lots of different customers. But when we met them, I'd never heard of them. We thought we were going to work with, this is for a system of record. We thought we'd be working with like FIS or Fiserv. But Mark got this inbound. He was like, hey, there's this company here called CoreCard. They have this platform we could use and they'll do it for equity. And we were like, sweet, doing it for equity. We love that. And also we worked with another decisioning platform called GDS, and they also did the work for equity. So finding those partnerships was really valuable to us because it allowed us to conserve cash while still build out the system and improve things. We also had a great, and I'm sorry I have to say this, Kara, but we had this great relationship with Yodlee. I've been working with them for a long time.
Great.
But we love Amex too. We're actually in the middle of evaluating you guys, as you know, right now.
Love
We
to
think
hear
there's
it.
a lot of good stuff to do there. But anyway, so that was another great partnership because, they grew with us, and because I knew people there, it really helped. So, finding the network of people, I think, and businesses that may be willing to work, in some sort of combination of money and equity is super valuable.
And how was that? Maybe talk about even Yodlee, some of the earlier partnerships. Did you guys seek them out? Were you sought out? How did you meet these companies? And how did you go through the vetting process of even deciding? You mentioned growing with you being one of the key reasons, but that's obviously a huge part of getting a company off the ground is some of those relationships.
I've been in fintech for a long time, so I knew a lot of these people already. At Yodlee, I had my first meeting with them in 1999, before probably most of y'all were born. But anyway, so I already knew them. And then, like I said, the CoreCard relationship came through an introduction. God, GDS, I don't remember how I knew them, but I did. A lot of these people were just relationships that I already had. But I mean, it's really easy now. LinkedIn, of course, existed, but it wasn't as common. It wasn't as easy to reach out to a network of people you don't know, to find people with expertise or platforms or products or tools that you think are going to be useful for your company.
Yeah, absolutely. That makes sense. So let's talk about Amex. Why did you sell to Amex? What was that process like? And now what is it like at Cabbage under Amex versus when you guys were kind of standalone?
Well, if you think back to March of 2020, when you're a company that provides our primary product was providing lines of capital to small businesses, and it looked like the world was going to shut down for, who knows how long, we thought to ourselves, I wonder if we should start calling some people we know to see if there are other options for us. At the same time, we didn't know there was going to be this whole PPP thing that happened. So we were sort of doing these, parallel paths. One of them is, working through the PPP, and, we wound up being the second largest PPP lender in the program by volume, largely thanks to the automated system that we built. And then at the same time, we were having these conversations with American Express. We'd known them for years. They serve small businesses. It's a great brand and a great company. When you're a venture-backed business, at some point, there's an expectation that there's some kind of an exit. And our plan had been to go public, but then in light of COVID, we weren't sure what that was going to hold for us.
Sure.
And at the end of the day, it was a good transaction, I think, for both of us. And I think it was a wonderful place for our folks to call home for a long time, which is, I think, really special and exciting for our team too.
That's awesome. I know that's quite a journey and a vetting process, and I'm glad to hear that it worked out so well for you and the team. There was a question that came up in the chat kind of on this topic, so I'll veer to that. But Glenn Servati asked, did the need to raise capital for operations as well as debt for loans make your challenge exponentially difficult? Raising capital for both of those?
I don't know. You're already in the process. I guess we already built a process. We had a data room like almost from day one. We went through so much diligence all the time. It was actually really easy for us as we continue to expand, and add to our facilities on the debt side. That actually got a lot easier. Equity remains hard, but we, had built a machine that helped us tell the story, provide the data. And we knew a lot of people in our network who had told us no many times. So we went to them a lot to get them to try to say yes again. So that happened all the time. So I think it's complicated. I think it's a complicated business, and you need to have the right people around. You need somebody in capital markets. You need to make sure, and it may not be your CFO. So it means you have to have enough people, and enough teams to support that work that is happening constantly.
And what role did your board play in this? There's a lot of conversations around boards, were they helpful? Like, were they kind of who you went to in that role, or how has the board even evolved over the lifespan of Cabbage?
Well, for most of Cabbage, the board was very investor heavy. So, I think, and it was just, that's naturally what happens when you're a venture backed business, is your investors have board seats. For the most part, our boards were super helpful, but honestly, they didn't wake up every day, and no board or advisor or anybody else wakes up every day thinking about your company. You're the one that's thinking about that company. All except for one board member. Everybody was super supportive. But you have to watch out for those board members. When you take money from someone, they're probably going to be your partner for a really long time. So it's really important that you feel comfortable with them, with their philosophies, with your vision for the business, with how you want to run and grow the business, because that can become really prickly really quickly. And it really, I think, overshadowed the last few years of Cabbage was this like super frustrating board member that we had that wound up not being supportive, even though everybody else was. But largely, I think it's great when you can add board members and investors who can be helpful. Just recognize that you have to ask for the help. They're not going to wake up every day giving it to you.
Yeah, exactly. That's a good way to put it. So what I'm taking from that too is it's not just about the money, it's about them sharing the vision. It's going to be people that you need to be willing to be with for the long term, and that are backing what you see for the company.
And also make sure that the other companies in which they're invested, the other boards on which they serve, are similar types of businesses. That if you're a growth business, that they're growth businesses. If that you're not sort of a fish out of water with respect to the rest of their portfolio, because that's what happened to us, and that makes a difference.
It seems that you and your co-founders, you've mentioned this a few times, that you know a lot of people in the business, and that you've been, you've worked with a lot of people in the space. And so it might have been easier for you to pick up the phone and call somebody, maybe not just a shameless plug for NFO, but, what is your advice to new founders, new teams, earlier stage startups, potentially not in Silicon Valley, not in New York, what, especially in light of, the past 2 years with COVID, like what's your advice for those people that might not have the relationships or came from a different industry? How would you advise them to both get involved and then, or is it hire somebody from the industry? Like, what's your biggest advice to early stage companies with that? 'Cause it seems like relationships for you and the network you've built have been incredibly helpful.
Well, I think it is important to have someone on your team, whether it's you or whether it's your co-founder. By the way, I'm a strong advocate for co-founders. Every time I meet solo founders, I always think to myself, that must be really hard, because you have to bear the burden of everything yourself. And also you don't get the benefit of another viewpoint. But regardless, I think it's important for somebody on the founding team to have industry expertise. And if there is industry expertise, then there should be, networks and relationships. And if there aren't, then it's important to network with people who do have those relationships. But again, it's the same kind of thing. People always want to help, but you have to remember that, they can only help so much. They're running their own companies, they're in their own businesses, They have their own things to do. So when coming up with an advisory board, it's important to make sure that there's a lot of structure to that advisory board, that you have regular meetings, and that you make sure if you have, people outside your organization that you're relying on, that you make them advisors and give them some equity, because I think that's really important. People shouldn't be expected to do work for you for nothing, and it aligns your interests. I think that's super important. So I think lots of people want to help, but you really have to be, focused and targeted and structured in your approach.
That's awesome. So that does kind of lead me to two other questions. I think a lot of people will be interested to hear, and maybe it would help too if you could give some insight into the size of the company at certain times. How fast you guys scaled, but how was it building, like growing your staff and building a culture? You have to be incredibly intentional about who you bring on and how you want to build it. Talk about that for you and your other co-founders. What was that journey like, and how was it at the beginning of Cabbage?
People are hard. When people ask me what I do every day, I'm like, well, nothing really, but I'm mostly dealing with people. Like I feel like 90% of my time, maybe 80% of my time is, resolving disputes, making sure people are focused and aligned, making sure that people are getting what they need, dealing with all kinds of requests that humans have. I think that's something that should be your answer. When I talk to companies about board positions. That's the thing I always ask the CEO. What do you spend most of your time on? If they don't say people, then that makes me really anxious about that company, because that is what I think people should be doing. The culture wise, it was really funny. If you come to our office, you'll see, lots of people hanging around. Maybe let's flashback to pre-pandemic. There happen to be a lot of people in our office today, but that's because we're having a really big party. So, but normally it's pretty quiet. But before the pandemic, you would see people walking around, eating lunch together. We brought in lunch every day. There's a keg and games and things, but people presume that that's culture. But culture is just really what people bring to, I'm so sorry. People, really loud people are walking by me right now. Okay. So it's not about a keg and a ping pong table. It's really about the community and the people who come, and they bring the culture. So I think one of the things that we did that was really useful to us over time, we started out with 0 people, obviously. By 2013, we probably had about 110 people. And we probably didn't need 110 at that time. We kind of realized that, and we slowed down our, human growth. And then, of course, as always happens, it ratchets up again. By the time it was 2020, we had about 600 people, about 100 in our Bangalore office and about 500 in the US, mostly in Atlanta. And I think what was so special is that Rob and I still continued to interview everybody for the final panel.
Oh, wow.
So we're able to get to know people. It wasn't just about like, hey, what we wanted to know, were people self-aware? Were they thoughtful? Were they going to be a good part of the community? We have a place where people have become lifelong friends and roommates and spouses, and they've had children together. And it's just this unbelievable community of people, that come together all the time. It's so special. And I think that last thing where we got to know everyone, regardless of what job they were doing, and we could sort of key in on people who wouldn't be a thoughtful part of the community, that was really important.
That's awesome. That, that kind of does go into my next question, which was going to be attracting the right talent. It sounds like I didn't know that you guys, so even up to 600 people, I guess maybe not the 100 that are out of the US, but up to 500 people, you and your co-founders still interviewed them and looked for certain traits, I guess.
Even the ones in Bangalore, same.
Oh,
same
okay.
thing. And I still do it today. I've got a bunch of interviews tomorrow.
That's awesome. That's so great. We've got so many questions coming in the chat. So let's see what we've got here. I think, any gut checks along the way, failures, lessons learned, as both an entrepreneur, a co-founder, and leading a business, and a people leader. People management is obviously a huge part of the job.
So many. I mean, the mistakes are, I don't even know where I would start, but one thing that happened is we had to lay off about, we had about 110 people in 2013. We had to lay off about 15 of them. And that was because our portfolio wasn't performing. It might come as a surprise that a portfolio full of eBay businesses might not perform exactly as you expect. So when that happened, we realized we needed to rethink, our strategy and our approach. And we had to let some people go. That was really sad. But I'll tell you, it was kind of galvanizing for the company, because everybody moved forward very resolute, to sort of change tide. And we did. Everybody worked really hard, and we wound up turning that into an opportunity to build a moat around ourselves, because we had all this data and experience that we could use to bring to our model to actually improve our trajectory, which we did. And that was, sort of turning the frown upside down. At the beginning of the pandemic, we had 600 folks. We wound up letting almost half of them go, because we basically shut down our operation until we started PPP. That sucked aggressively. In retrospect, I'm glad we did it sooner rather than later, only because so many people were able to go back, and they were able to go out right then and find something, because we did it early. And it was also an opportunity to refocus everybody's efforts. I had this meeting not long before the pandemic. We were launching a card product, and I had 3 different meetings to ask me basically, what color should the card be? And I was like, this should be, you stop me in the hall and you go A or B.
Yeah.
And I was like, we too many people doing too many things. This is not working. Like we gotta get down, get back to basics. So that opportunity to get back to basics was kind of exciting.
That is awesome. I can totally see how that would be the case. So on that question, maybe to double down, and you don't have to, I don't know if something specific comes to mind. You've mentioned a couple things, but if there were one thing you'd do differently in starting Cabbage, looking back, 1, 2, 3, anything, what would you do differently, if anything?
Gosh, that decision. Okay. You know what I wouldn't have done is, the problem is, it's funny. We asked this question in an interview. The question that we asked people, one of them at the end is, tell us about a decision you regret. Personally, professionally, whatever it is. So it's really hard to regret things that you think you learned from. But I will say, we ventured into this partnership model where we partnered with a bunch of global banks. And the idea was they would take our platform and use it to attract small business customers that they weren't ordinarily able to serve. And it was really hard and it didn't work. And it didn't work because what happened was a CEO of a big bank woke up one day and said, we're going to do tech partnerships. By golly. And so everybody do that. And so let's go with Cabbage. And so what would happen is that the incentives were misaligned throughout the rest of the organization, because when nobody was getting paid extra to do this thing, and it would involve maybe taking some additional risk. And again, nobody's incentives were aligned. So I think what we learned from that was we shouldn't give up a big part of what we do. It's not just the user experience, it's the underwriting, it's, how customers are, brought to the platform, and it's how they're funded. And I think we gave up too much of that in those relationships, and that was a mistake. So I wish we had done those differently, and I think it would have probably been more successful.
That's awesome. That's good to hear. That's not what it wasn't what I was expecting you to say. So it's always a good lesson to hear that from.
What were you expecting me to say?
I don't know. I just wasn't. I don't think that came top of mind. Maybe something about the early days and something with the product, but. On that, we've talked about talent. This is a crazy market that we're in, crazy times. The early days, at Cabbage, you guys being in Atlanta, what was your philosophy on attracting talent? Was it difficult? What was you guys' philosophy on pay and equity? And how did you, if you found somebody you wanted on your team, what were you willing to do to get them there? I guess, how was it attracting great talent in the early stages? That's always kind of the push and pull with startups.
We were really fortunate that we were kind of one of the few cool tech companies in Atlanta, doing different stuff, very casual and convivial, I guess you would say. So the culture itself really attracted people who wanted to work on something using new technologies, doing something in a different way, where they could wear shorts and flip-flops. I wouldn't call that culture. So I think that was helpful, but I'll tell you a funny story. We put up these billboards. This is a long time ago, like 10 years, maybe more than 10 years ago. We put up billboards on 85, and it was like ninjas wanted, and superheroes wanted for engineers. And years later, we're having this conversation about diversity, equity, and inclusion, and we realized that those were really man-focused qualities. So like, why can't we get any women engineers? Oh, well, maybe because none of them want to be freaking ninjas or superheroes. Yeah, exactly. So I think it's really interesting how you learn over time that it's not, you can't just presume that people will come. You have to make a concerted effort to make it a place where people want to be, where they feel comfortable, and where they see people who look like them. And so I think we learned a lot from that experience, just way too late.
That's awesome. That's a great story. Okay, I'm going to pivot a little bit. You've touched on PPP a couple of times. There's a few questions in the chat related to that. So Kathryn had asked this was an anonymous question. How long did it take you to put your automated loan process together? And did you partner with banks to process their PPP loans? Maybe talk a little bit about the experience going through that. And you said, I think you were the largest processor.
We were the second largest by number of loans. We made about 250,000 PPP loans, right behind Bank of America and ahead of Chase. So we already had the platform built. So one of the biggest challenges that banks had, you might have heard stories about where banks were only making PPP loans to customers that had already borrowed. And I think they were kind of unfairly maligned. And there was this suggestion that they did that because they wanted to make sure that that business repaid the other loans that they had with them. But that really wasn't it at all. It was that they'd already gone through that really complicated KYC and KYB process to know those customers. And we already had that automated. So that really removed a huge step. The part that was weird about it, the part that was hard for us, is using different data, in particular tax forms with which we were not familiar, had never seen before. I say this all the time, and I'll answer the do we partner with banks question in a second. No bank should have ever been part of that program. SBA's general programs partner with banks, but no bank should have ever been part of the program. The IRS should have simply looked at the SBA and said, here's a file of people, and here's how much money you need to send them. That's really all that needed to happen. But the lack of, technology and the technology architecture and the lack of access to an API or real-time data, I think is what really prevented them from being able to do that. And I'm glad for Cabbage, because it was great for us to participate in that program. Yeah, but it shouldn't have happened. And I'm sure that happens all the time. That Cabbage only exists because of, lack of efficiencies places. But we did partner with banks. We partnered with a couple banks, not just for processing, because we were a direct lender, but we also sent loans to other banks, but also a bunch of smaller banks that couldn't do their own PPPs sent customers to us.
That's awesome. That's awesome. Yeah. And it's great that there were, even in those inefficiencies, there were people like you that could step up when people needed it. So that's awesome. Speaking, this isn't PPP, but somebody had asked, what was the process that led you to working with Fifth Third Bank as your sponsor bank? I'm sure there's going to be a lot of questions about that, and what advice would you give to fintechs as they look to work with sponsor banks or banks that are looking to work with fintechs? What advice do you have there?
We didn't work with Fifth Third. Our bank that we worked with for lending was Celtic Bank. And I've worked in a bank partnership model since the 90s. So when we started Cabbage, that was one of the things that I already knew we should do, and I knew how to do it. And the reason is because I'd rather be regulated than, the target of regulation. So, sort of the devil you know versus the devil you don't. And so that was a really important thing for us early on, to make sure that there was a bank. We loved Celtic Bank because they were actually one of the top 10 SBA lenders in the country at the time. And so they really understood small business lending, and that was valuable to us from sort of a regulatory and oversight perspective. So we actually wound up working with a bunch of different banks. For merchant processing, we wound up working with WorldPay, and so therefore Wells Fargo behind those transactions. And then for our checking account product that we launched, we worked with Green Dot Bank. So we were regulated 8 million ways to Sunday. And it's funny because everybody always talks about fintech as the Wild West. There's no regulation. I was like, dude, we were so regulated. You have no idea. Yeah, exactly.
So who led that? Was that you and the co-founders? Did you have a team that kind of fostered the bank relationships? What was it like, securing those different relationships with institutions?
It was a one-to-one relationship. So I've introduced a lot of people to folks at the various banks where we've worked, but it's not a hard process. They're smaller banks. So, it's important to them. It's a great way that they can diversify. I've said all the time, and I hope I don't make anybody mad who's listening to this, but I really think that, fintechs are changing the way consumers and businesses interact with financial services. And those brands are becoming the brands that consumers and business really recognize and they prefer. And what happens is the banks, potentially become utilities in this. They become the money movement utility and the regulation management utility that powers fintechs. And I'm not suggesting that that's good or bad. I just think that is kind of what's happening. And these smaller banks are taking advantage of this opportunity to be those pipes and to be that utility, because it's easier than, trying to be a national bank getting tons of customers on your platform.
Yeah, absolutely. So this is a great question. Kara Hayward at Currency Cloud, Visa. So as a startup, you're often told, quote, what you don't do is just as important as what you actually do. So can you talk about any hard decisions that you may have had or had to make to turn down opportunities, or to say no to certain things, be it your product or partnerships or certain deals, to keep your focus?
Yeah, we turned down a lot of partnership opportunities. I think one of the things you find is, whether it's because you're both a portfolio company with a certain investor or just because you're in the same industry, there's this desire to work together. But, working with startup is really hard to do because, you're all trying to solve your own problems every single day and you're moving really fast. And I think that's a challenge. By the same token, working with a really big company when you're a startup can be hard too, because they're kind of the boss of everything. And they may ask you to do unnatural things in order to get that deal, to get that partnership, to get that business that changes the course of your business. We had this experience with Alibaba. They used us sort of in the checkout flow for small businesses in the US who were buying from Alibaba, so that if they wanted to pay over time at checkout, that was Cabbage. And we wound up sending like scores of people over to China to meet with Alibaba. They came to us, they made us change all the things we did, everything from our underwriting to the way the product flowed, to the way it looked. And ultimately it didn't generate enough revenue to make it worthwhile. So I think you have to make sure, as Rob would say, that the juice is worth the squeeze and that you quantify that before you write your first line of code.
Yeah, absolutely. That's great. Great question, Kara. So a couple more in here from Kathryn. So what market and macro tailwinds do you foresee helping new fintech businesses scale the most in this decade?
Well, new businesses that have just, I think new businesses that have just received funding are probably in a pretty good space right now, because I think it's going to be a little bit harder to raise money for a little while. I think, businesses that have already generated revenue that have a path to profitability sometime in the next, year or two, I think those businesses are going to be better positioned to raise more money in the next couple of years. Not that you always want to be raising money. I hate for that to be the story, but when you're a startup, that's the thing you need. The number one reason that businesses fail is lack of access to capital. Yep. So probably the number two is like, it's a dumb business, but I just like to focus on number one.
I love it.
So I think that's great. I think, it's always counter-cyclical businesses are always, exciting. We like to say how we started during, right in the middle of the global financial crisis, and beloved brands like Amazon and Apple and Microsoft and Oracle all started in an economic downturn. And so I think, when everybody's zigging left, you want to, zig right or zag right. So I think that's the tailwind. Another tailwind is access to data, so open data. There's a lot of, and you probably actually believe this more than anybody, getting better access to good data that sort of democratizes access to, the best products and services for consumers and businesses, I think is a huge tailwind. Headwinds maybe are that like the biggest, financial institutions are trying to figure out how they can come at this market too, because they're afraid. And so maybe they'll start working a little harder and doing a little better, and keeping some of those customers that some fintechs may be trying to get as well. And again, there's just economic uncertainty. Inflation is hard. Hiring is really hard. I think that's a huge headwind right now, is getting the right staff, keeping the right staff. I think that's probably the number one challenge that I've heard most CEOs say that they're experiencing right now.
Yeah, I would agree. It comes up a lot in conversation. I think, a lot of the questions even here have been about talent, retaining talent. The last one that just came in on that topic, what is your advice maybe in preventing employee overwork and burnout? That's been something that's come up a lot during COVID, especially with everybody being home and not getting to experience the culture in the office and the ping pong tables and potentially the beer, depending on where you are. But what is your kind of advice there? I mean, how have you guys kind of prevented the burnout and employee sentiment?
American Express does something cool that actually predates the pandemic, but I think it's kind of neat. They do these summer extra flex days. So you can take a half day or a full day, some number of them over the course of the summer. So I think, to make it like, yes, you should take some time off. That's really important. I love no video Fridays. I think that's a great idea, or no meeting Fridays or Thursdays or Wednesdays or whatever the day is. But the idea that there's a day you don't have to be on video, don't take a shower if you don't want to, do it from your pool, who cares, or your gym or whatever it is. I think that's really important. And to not call it out. Oh, I see you're not on video. Where are you? What are you doing? I think those things are really important. And then there's small things you can do, whether it's, giving people a gift certificate to a massage place or, dinner, something like that. That's just a little different and special, that they connect that great experience with you, which with the employer.
Yeah, I think, we've talked about that a lot, but a little bit goes a long way. Sometimes it doesn't take too much to make somebody feel valued and feel special. Okay, so wrapping up here with questions. I mean, Kathryn, is there anything just overarching advice you give this audience? We've got a lot of entrepreneurs, a lot of fintechs, a lot of people that are have mature businesses, a lot of people that are just starting out the gate. Just any advice you've got for the group?
Oh man, it's really hard to just say general advice for a business, but I think it's important to listen, to listen to the people at your organization, to listen to what they tell you, to realize that sort of the truth is always in the middle. I think the biggest thing I've learned over the years at Cabbage, this is kind of a funny thing to say, is how to react and how to not react. I have this habit, I have this personality. When somebody tells me there's a problem, I just want to jump in, I want to solve the problem. And there's this hysterical YouTube video that I would like you all to Google right now. It's called "It's Not About the Nail." It is so funny, but it is exactly about that issue. But I think learning how to figure out how to invest your energy, where to invest your energy, and how to wait to get enough information before you react, so that, so you're making the right decision and with the right reaction. And otherwise, I would just say, try to have fun. Try to, surround yourself with people you enjoy, who are really enjoying the mission, solving the problem. And it's exciting that we're all getting back together in person. I was just at an event in New York this week and everybody was so thrilled. So we get in this habit of doing the thing we've been doing. And so we're hunkering down in our basements and our spare bedrooms, and let's get out there, get together.
Yeah. Get out, meet people. Well, Kathryn, thank you sincerely for joining us today. It's been such a privilege to get to chat with you and talk through Cabbage and all of your success. And we sincerely appreciate you sharing any of the insights that you've learned along the way with this group. To the NFO audience, thank you guys for joining our launch event. I want to remind everybody of our next event. It's going to be on June 21st. That's a Tuesday at 11 a.m. Eastern with Sam Kilmer of Cornerstone Advisors. Going to be talking about success factors for fintech companies and getting deals. So be sure to join us then. Again, Kathryn, thank you so much for joining.
Thank you. Take care.
Appreciate it.